Hey guys, Steve here with the Anatomy of a Stock Trade video for today. We're going to take a quick look at a trade we made in Time Warner, TWX, for the model portfolio. This was one of the first positions we entered for the model portfolio, so it actually proved to be a nice gain. So if you guys aren't following along with the strategy sessions and the weekend update, I definitely recommend you do so. That provides a lot of information. And the weekend update especially provides a nice basis where we identify these trades when the markets are closed, so we can just follow through with our plan during the week, and really not put too much time or effort into it during the week when everyone's busy, and do a little bit more of our analysis on the weekends. But with that said, we essentially looked at Time Warner. The chart on the top, is a little bit of a zoomed in of the 3-year weekly that we typically look at, and you could see the nice trend line that had been established. So we had a couple touches of that trend line here, and eventually the stock broke the trend line and decided that it was going to consolidate and move sideways for a while. That's when we started picking up the stock, and during this sideways consolidation, eventually what happened was it started to consolidate towards the upper end of this consolidation. So we were looking at and identifying now on the daily chart, we're identifying this sideways movement here. So this was a setup that we had. This is the setups that we typically look for along a trend line. Now it was in this gray box consolidating. Hopefully, we were waiting for that breakout of 71.50, as you can see here. So as the days and weeks went on, we eventually got that breakout here on 7/9. I think I actually started the blog on July 3rd, I think, was the first weekend update. So this was, like I said, one of the first stocks that we had entered for the model portfolio. But we got that breakout, and if you haven't been following along, when we get a breakout, we enter the next morning at the open. So that's exactly what we did. We entered here at 71.82. A couple days and went by, we tested, and then looks like 5 days later, on the 16th, we got news that Time Warner was being bought out by, I don't remember who, I don't know if it was Viacom or someone else, that made the stock pop essentially from 70 and it closed at 83. I think on this day here, 7/16, I had tweeted out that, or even discussed in the strategy session, that we were going to take the exit in the stock, just because of the nature of it. This isn't typically how we would do it. Where there was a couple different options that I had discussed. That one was moving the stop to 81.44. The other was just taking the profits because of how quickly, I think we had like a 17% gain in 5 days. So in my book, you take that, no questions asked. But the one concern I did have was if we did set a stop at 81.40 and the stock, gap down because now there wasn't going to be a buyout or anything like that, that I was concerned that we would not get stopped out at that 81.40 that we were originally planning. So we ended up taking the trade. Trade moved against us for a little bit. Eventually it did tap out at 88, and then as we continue, I do continue to watch these a little bit. It consolidated, and I thought maybe it was setting up for that we could draw another consolidation, and wait for a breakout over 88. But usually when you get a buyout, a stock becomes really dead money. And sure enough, what happened was earnings came out. The stock gapped down back to this 50-day moving average, 74.74. And the gains that we would have had, and exactly what I was concerned would happen, was we would get a gap down from this level and eventually, really take away most of our gains. So looking back, the stock now, is really just consolidating again. But looking back, it looks like we made the right move. So sometimes you have to know when to break your rules. This was one of those times. This was actually the first time I've ever been involved personally in a takeover gap up. So I'm glad the way we played it. It seemed to be, at the time, it may have looked like it was going, and we were going to leave some profits on the table, but I was more than happy to take that 17% gain. And like I said, sometimes you just have to know when to take that profit and when to continue using your rules. Some of these are a little bit of an extraordinary circumstances, so I think we made the right decision. So just again, this is just to illustrate different ways to take an exit and different situations that may come about in your daily trading. So this was one way that we played it. I'm glad we played it this way, and it turned out to be the right way. So if you haven't already, please follow me, StockTwits, Twitter, Google+, subscribe to the YouTube channel, and subscribe to the nightly recap to make sure you're getting all the future updates and videos that I provide. With that said, be on the lookout for the strategy session tonight. Have a great rest of the day, guys.